So guess who made a trading mistake the other day? Yep, this guy. One of the things that you guys don't see is that when you're a trading coach, right, we're basically trading within a glass house, right? There's full transparency. We're analyzing the markets live each and every day. We're trading the markets live each and every day in front of our clients and whatnot. And everything we do is on display, right? We are naked in front of the world. All of our flaws or everything we'd like to brag about, is on display. And it's a double-edged sword, right? It works well when you're doing well. Obviously, when you're doing good and you're hitting winners, you get to kind of beat your chest and, be like, yeah, you see that? Yeah, you saw that live from start to finish. On the other hand, when you're losing and you're getting skunked out and stopped out of orders, you get to see your pain. I'll tell you what, in general, it's been a big positive for me as a trader. Why? Because it has kept me accountable. And that's one of the reasons that so many traders show up each and every day. It's accountability, right? As traders, we're often stuck on this lonely island. It's funny, I just did an interview a couple months ago with, was it traderlife.com, where they did this cool little, I want to call it fantasy questionnaire, but this cool little thing where it's like, hey, if you were on a desert island, you had to trade your way off, what would you do? What would you bring? All that fun stuff. And trading really is like that. Most of us are trading on our own. We're trading from our home, or we're sneaking onto our charts at our home office or our office at work. But typically we don't have any physical friends that trade as well, meaning all of the other trading acquaintances that we have are from the internet. So when it comes down to place trades and take trades, we're kind of by ourselves, which can be very hard. And we know that the number one rule of trading is don't go broke. The number one thing that makes traders go broke isn't a lack of knowledge, although that's big, but it's a lack of discipline. And when you have to hold yourself accountable, it's very hard to stay disciplined, especially as an underexperienced trader who still has the temptation to give in to emotion. So I've been running a live trading room for about, 2012, like about 6 years now. And it has helped me massively with my discipline because I can't make mistakes, right? I practice what I preach. And if I do something that I'm not supposed to do, guess who sees? Everybody, right? So I may be tempted by myself when I'm on my own and be like, I could just take this even though it hasn't met my rules yet. But in the back of my head, I know that I went over the trading situation with our traders earlier in the day. I told them exactly what I was looking for to enter or whatnot. And if I come back the next day and I say, hey, I'm involved in this trade, and they say, hey, Akil, but we never got this, I lose all credibility. And that's, integrity and honesty is key to me. So it holds me accountable. And again, the traders that join us each and every day, it holds them accountable as well as they come in and they share ideas. And I often drill them a little bit like, hey, why are you doing this? What are you doing there? Explain it to me now. 6 seconds, go. Right? 6-second rule. If you can't explain what you're doing in 6 seconds, it's probably not a part of your trading plan. But the other day we were in a live room. And we're going through the charts as normal. I was doing a lesson on something, right? Some pair, probably euro dollar. And the trader shot a message through the chat. He said, hey, Akil. I said, hey, traders, dollar Canada hourly chart, bear cipher almost at market. So I went over to my other screen, right? And I loaded up, looked at my dollar Canada hourly chart and I said, whoa, wait a minute. This really is at market. Literally, price was resting about a pip or so right below where I wanted to get involved at, right? So I went over to the chart, I set my orders, right? The completion was at 80. I set my orders at 78. Now, price had already hit 78. So it had technically been triggered, but we were only a few pips off, and there's plenty of time for price to come back up before it goes down to either hit targets. Basically, there was another price didn't move so far away that I would consider the trade to be over. So I loaded up in front of the screen, showed the traders. I put my orders on, stops and entries, whatnot, and I put it away. I'm not a fan of looking at charts. drives you crazy. It drives you, it makes you more likely to make emotional decisions when you're watching the market tick up, up and down and down and down, right? Either closer to your stops or close to your targets. So the best thing that you can do is just set your entries, entry stops and targets, and put it away, and then let the market play out how it needs to play out. And especially for someone like me who has a show to run, right? I'm doing a live room. It's time to continue whatever discussion we were having on the pair. And so I place orders, and then about 2 minutes later, the chat starts going wild. And it was remember we had a Canadian GDP news coming out. And the chat's going wild. Canada's moving, Canada's moving, Canada's moving. And I look over at my Canadian pair, and I see a big bearish candle, right? This big bearish candle goes down. It's already spanked through target ones, and it's close to target twos. And I'm thinking to myself, man, it's missed it. One of those trades where, it just missed my entries and ran off without me, right? Happens again. Just because that's what it looked like on the chart. So I went on to cancel my orders. And when I went to cancel my orders, guess what I discovered? I discovered that I was actually filled the trade, and I didn't even know it, right? Because, if big news event came out, high volatility news came out, this all happened, right? The market bounced around about 40 pips in a matter of a few seconds. So it really threw me off my OODA loop. And the OODA loop, think of your OODA loop as like your routine, right? Have you ever been knocked out of your routine and you seem like you can't get the rest of your day right? How does that make you feel? Like, right? You're supposed to wake up at this time. You're supposed to grab your coffee at this time. You're supposed to head into the car at this time, then drive to work at this time, your normal routine. But instead, today you wake up, you grab your coffee, you go into your car, but your car doesn't work. And now you're 15 minutes late. And now you're panicking because it throws off everything else, right? It throws you into this panic zone. And that's what I was in the market, right? I wasn't panicking because I've been there, done that a few times, but it caught me off guard, and I had to figure out how to manage this trade correctly on two machines. I have a personal account, and I have a tier 1 trading account that I use as well. So I'm going through this, and the first thing I'm supposed to do is I'm supposed to take, we had passed my would-be target ones. I didn't have time to get targets on yet. So I was supposed to, the first thing I wanted to do was take profit, right? I wanted to move stops to break even, obviously, protect myself from any back-end risk. And I wanted to take half of my position off at a little bit more than what my normal profit would have been. So I want to do that. I want to do it quickly because we were steadily approaching target twos as well. And this is where I made the mistake, right? I don't know if it was because we were talking about another pair, but it was a sell order, right? I was short the market. So in order to take profits, I need to buy, right? If you're selling something, you need to buy it back in order to make profits off of it. But instead of the buy at market button, I hit the sell at market button, right? So I sold an extra position. Now, instead of having a 2 contract position, I've got a 3 contract position, right? And I didn't notice it at first because, again, I'm not panicking, but I'm out of my OODA loop a little bit. And so I execute this order, and what the market ends up doing, it ends up averaging me in at a lower spot. Meaning that if I sold at this point and I ended up selling at a lower point, I get averaged in at a lower price point for my average position. And I saw that, and I'm like, why the heck is my order down here? And the first thing I thought is, well, I must have been slipped. As mentioned before, it was a high volatility news event, and sometimes slippage happens. I'm like, maybe I just got slipped a bunch of pips on the entry. And then I finally kind of snapped back into reality, right? Again, this is all happening within like 5 seconds. I finally snapped back into reality, and I realized what I did. I'm like, crap, right? And because it was a day trading opportunity, and the market was steadily moving towards those target twos, I didn't have time to calculate what I actually did in far as how can I make the adjustments for it. So what I did was I exited the entire position for profit, which was great. I actually made a little bit more profit than I would have if I would have done something else, if I didn't enter that 3rd position short. But I exited immediately. And I told the traders, I said, hey, this is a great learning experience. Because not only does it give you kind of confirmation, a little bit of, I guess it makes you feel a little bit comfortable knowing that these quote unquote professional traders, these trading mentors, these traders you look up to make the same mistakes that you guys do, which is very comforting because people tend to think we are robots, right? But not only do we make mistakes as well, but it was a good example of showing you how to manage the mistake, right? And in this case, it happened to be a winning trade, so it wasn't. It could have been worse, but I would have done the same thing in a losing trade, and how to stop like a small mistake into becoming a big car wreck in the market. And it came at perfect timing because I had just released a new training course that was specifically related to day trading. Now, in trading in general, I teach a general style of trading, right? A general rules and techniques of reading a price chart, reading price action, which can be used on any time frame from the weeklies all the way down to the 1 minute chart. Although I highly recommend not using the 1 minute chart. But you could. Price action moves the same on all time frames. It just moves a little bit faster or a little bit more volatility depending on the lower time frames and news events. But one of the things that I said during this day trading course was like, day trading is the same concepts will be used. Obviously, you can take a little bit of a different approach, but something you want to pay attention to is the fact that it feels like you're driving on a highway versus driving on a small one-way street, right? So higher time frame trading, swing trading, it's like a small one-way street, a private road, because you have plenty of time to do your analysis, right? If you look at a daily chart, right, you get one candle per day. A single candle per day. So you have all of the time in the world to think about your trading decision, right? You can go through that whole if-then thought process. You can go through that whole IPDE where you figure out where the market's at. You identify where the market's at. You make your prediction on what you think the market is likely to do next and where you think the market is likely to go next. Then you have time to go through your trading plan and look through all of your techniques and strategies to see how exactly are you supposed to handle the situation. And then you probably have a few more days until price actually gives you the signal or gets to the place in which you're looking to trade, right? You have plenty of time to review, make decisions, review your decisions, go over your decisions again, do more analysis. All of the time in the world. There's no rush. The day trading time frames, the lower time frames, are the exact opposite. They're like the highway. Things move fast. The market makes the same move, but instead of having days to do your analysis, you may have minutes. So you have to be very, very sharp in reading a price chart, and you have to be very, very set on knowing your trading plan like the back of your hand, right? And I asked you guys out there listening to the podcast, how many of you guys know your trading plan, right? If I were to ask you, what do you need to buy or sell? Could you tell me in less than 6 seconds? Right? I could, right? If someone says, Akil, is price actions coming down to previous structure support, what do you need to enter? Well, if price action comes to previous structure support, then I need the RSI to go oversold. If the RSI goes oversold, then I need to retest a structure giving me a double bottom. If I have a double bottom, then I need to see bullish divergence on the RSI. If I get bullish divergence on the RSI, then I enter next bar market. Stops go 1 ATR below the low. Targets go to 3 to 2 retracement from the previous impulse leg. Boom. And I don't say that to brag, and you guys don't go out there and trade that. That's not that's not a trading strategy for you, but it's an example of knowing your plan, right? You know exactly what you're looking at. You know exactly what you're looking for. You know exactly what you need to enter. And you need to know it that sharply, right? That quickly if you're going to be on the lower time frame, because things move fast. And at the same time, you need to know how to handle yourself if you're in a crisis, right? Crisis management. If you make a trading mistake, what do? Me, right? If I make a trading mistake, or if I ever find myself in a trade I'm not supposed to be in, which has happened before, I've had plenty of trades where I've loosely measured out the fibs only to find out that I missaw a point and we actually didn't hit what we were supposed to hit and I shouldn't be in the trade. Exit immediately. If you enter a position the wrong way, what do you do? If you enter a different position, what do you do here? If you do this, you do that, right? There should be a plan for whatever type of mistake you make, and you need to know it like the back of your hand if you're trading on the lower time frames. So it was a cool, learnable moment. Again, not only does it show that I'm human as a trader, but it showed our traders how a professional handles themselves when they make a mistake, and that it's okay, right? It's not the end of the world. Sometimes you make more profit than you're supposed to, like I did today. Sometimes you minimize a loss. It doesn't matter what the outcome is, right? Outcome doesn't matter. It's all about the process. Are you going through things the right way? And if you go through things the right way, right, that's how you become an independent, consistently profitable trader.